It is Friday, and I hope it's a good one for you. It is Friday, June 5th, 2:38 p.m. New York City time. This is Futures Brizio, and as always, before we get started, smash the like button on this video, subscribe to the channel if you're just finding it, and any questions, comments, leave them down below. As I've always said, this channel is not a really big channel by any means. But I don't make this channel to get YouTube ad revenue, and I don't sell anything here. So that's probably part of the reason why, but it really doesn't matter to me. My purpose of this channel is just to come on here and discuss the markets that I trade and discuss methodologies, whether it's mine or anybody else's. Uh, and look, I watch I don't know if I ever really I mean, I watch tons of YouTube videos of so-called trading gurus, some that I kind of like, and other ones I watch for pure entertainment. And to be honest, about 90% of it is for pure entertainment because they're all fake. They're not really trading, or if they are, they're not successful traders. They trade for YouTube ad revenue. They post videos for YouTube ad revenue. They sell signals. They sell courses. They sell, quote, mentorships. And that's how they really make their money. And the only way you can do that is by having a very widely watched YouTube channel with lots of subscribers that are clicking on your videos and, subscribing to your channel, and more importantly, buying whatever it is that you're selling. So I don't do any of that, and so that's part of and I also don't make a lot of content either, because again, this is not, YouTube is not my gig, but I do enjoy it, and for whatever it's worth, that's why I do this. And if nobody takes anything from this, that's perfectly fine. Then I'm talking to the wall, and that's okay too, because again, I'm not doing this for money or anything. Okay, unlike again most of the vast majority of people that are on it. I've seen people. YouTube throws up a lot of suggestions on my YouTube feed when it comes to trading stuff. I mean, there's a lot of other stuff I watch too, nothing to do with trading. But in terms of trading, I get these channel recommendations, and yes, I get recommendations for a lot of the big channels. A lot of them I subscribe to, and again, it's not because I believe anything they're saying. I do it for pure entertainment purpose. But I get suggestions sometimes on YouTube channels that have even way less subscribers than I do, like 100 subscribers. I mean, I have like what, 450 or something like that, which is nothing, obviously. It's not even enough to be monetized. You have to have at least, I think, 1,000 subscribers to even begin to be monetized. So I'm only like halfway there. But I see people with like 100 subscribers on YouTube that are basically, they're sitting there with no shirt on. They're like some guy sitting there with no shirt on, in front of his little plastic desk with his computer, trading the NQ or the ES or the euro dollar on a 5-minute chart. And he's trying to push a course or a mentorship or signals. And I'm like, who are these people that are like actually buying that stuff? I mean, it's just crazy to me. But again, pure entertainment purposes, most of those guys I'll watch for like 5 minutes and then I click away because I don't want to give them the watch time, honestly, because that's how YouTube part of how they figure their algorithm is watch time. So anyway, so that's a diversion there for another time. If anybody has any comments on that, feel free to leave it in the comments below. All right, so we'll just jump right in. I did take another trade on wheat today. Oh, it's not showing on the chart. I did close it a little early because I had to go out around noontime, and I wasn't going to be back until I just got back a little while ago. The market was closed for the week now. And so it was another little trade on wheat, and you can see it right here. It was basically, I got out just above this low here. So here's the low. Market closed. This is the closing candle right here at about 20 minutes ago. I got out on this little wick right here. It did go down a tiny, tiny bit more back to these old lows. And, I said I took 2 contracts. So I don't know, it was like $400 or $500. So I took, 3 trades in a row. And this is just talking about futures, are just clearly based on just simple strategy in terms of moving average. Just these pullbacks. This market's been trending really well. This is wheat. and it was just a another ideal setup. I took the trade just before the market opened, and then I closed it, like I said, about 2 hours ago, 2.5 hours ago, before I headed out to my appointment. So, anyways, that was the only trade I took. I think there probably were other trades in this. Yeah, there was a corn trade, similar setup. There was a soybean trade, similar setup. Soybean meal, that actually would have been the one to take. And look at this one, soybean oil. Man, I've been too focused on wheat. So it's been a good day in that respect. These markets are trending right now, which is nice. The thing with the grain markets, you have to, if you trade them a lot, you understand is they do go through some really rough periods of consolidation. Um, whether it's certain times of the year due to crop factors or whether it's just normal market rhythm, like any asset, it's going to go through periods of consolidation. But when they trend, these make really clear trends, as you can see. And this is like shooting fish in a barrel. I mean, you can see all I've got on here are two moving averages. I just wait for a pullback into the moving averages. Even if it goes below, that's fine too, as long as it doesn't break the previous structural level. Like, right here, we did dip below, but we didn't break the structure way down here. So this is an awesome buy signal right here. So, stuff like that. So that was it on futures. I'm hoping some of these downtrends or uptrends continue next week. You can see on just taking a quick look at soybean oil here, there is a big support level sitting here. This market was in an uptrend. So it'll be interesting to see if we can, whoops, I really wanted a line. Well, whatever, this is fine. Will be interesting to see what happens when price gets to this area here. It's going to bounce. Okay, bet you, there's a 0% chance that we will not see a bounce off of this level. Okay. Now the question is, does it just bounce and then immediately smash right back through it? Or is this actually just a pullback in this uptrend and we're going to continue to head up? I don't know. We'll see. If these lows get broken and we get like a daily close underneath this area, which is obviously a very key level of support at around the 73 zone, which price has been held up multiple times, then that would probably shift my bias to the downside on this. And so that's what I'll be looking for. So this is the daily chart. I don't trade off of this, but I certainly use it to look at the bigger picture and kind of figure out, where price might get held up. When we look at the wheat market, I've been trading. I mentioned this yesterday, which is why this yellow line is still sitting here. You can see also we've got a major support level sitting here. So I do expect price will maybe trickle down a little more. It might stop here at these where this uptrend started. We might only get price come to here, which is about where it is now. But I suspect between where it is now and down to this yellow line, which is right at about the 5570 zone, that we'll see wheat at least bounce. So that's why I keep an eye on the daily chart, higher time frames, just to kind of position myself. You zoom down to that 1 hour chart for trading, it's great, but you kind of miss the bigger picture and you might be, in this case, selling right into a major support area, and you don't want to do that. So that's the kind of thing I will do before I take these trades. Corn is actually in a steep downtrend. We have to go out to the weekly chart to really see anything with corn. And we smashed through this level, we smashed through this level, and we're approaching this little level here. I think this one probably will break, and we could be heading down to these weekly lows down here in corn. You can see this big bullish candle back here, which was last summer. I can see price heading towards those lows. Soybeans have now, put in this double top on the day. This is the weekly, but you can see it really nice. You can see it on the daily. Here's that double top. If we go out to the weekly, I don't think there's really anything to stop this downtrend until at least down here. So this will be a market I watch close next week. Soybean meal is the same thing. And soybean oil. Yeah, we already talked about soybean oil. And then there's cattle, which is still in an uptrend. So there was no entry in cattle today. Oh, actually, this is the wrong time frame. So cattle, we're still in an uptrend on the weekly chart. Today, look at this crazy price action yesterday. Look at this weird candle down and then up. That's what I mean with cattle. It's just such a wild market to trade. I may just take it off my list. It's not worth the volatility. These huge gaps, gigantic wicks. It's just craziness. So the grain markets are a little bit more tame right now. Not that they don't get like this sometimes, but right now they're pretty clear. So I'm probably going to have a heavier concentration on futures next week, especially on a couple of these markets that I think still have some headroom or floor space to go before they run into any major areas of support or resistance on the high time frames. Okay, so just simple 1 hour trading on the hourly chart using a couple moving averages. Just identify a clear trend, wait for price to pull back into those moving averages, jump in, and I get in right before the market opens, because these grain markets, like I said yesterday, are only open for about 5 hours a day. And on most days, the initial move is going to come pretty quick. It's going to come usually within that first hour. That's going to be the bulk of the move for the day. So if you don't get in right at the beginning, or preferably slightly before that, then there's a good chance it's just not even worth it, because you're going to be chasing. The market will die out, and it may, continue to drift in that direction. But the bulk of that move is going to happen probably within the first hour, hour and a half. So if you don't get in right from the beginning, it's probably not worth it. So that's why I've been placing these trades, either just exactly at market open or even pre-market, with a pending order, and just holding it, through the session. So, or at least to new highs or new lows. So, all right. So that's the grain markets. For futures, some good stuff going on. I probably will make a concerted effort to look at those next week and see if I can grab a few more good trades. Okay, on to Forex. I need to change my indicator template. So as usual, we're talking about the CSI indicator. I did change my color scheme here. This changes to red. The reason why it's red, because I had two different versions of it on my chart, because I was comparing entry points. So in order to not confuse myself, I changed the colors. But I ended up deleting the other one, and I just left the colors as is. That's why I've got red and aqua, or whatever this is, sea green, as opposed to the orange and sea green color on the traditional one. The indicator is kind of optional. This is just a 50 period simple moving average. I'm on the 4 hour chart. And again, the 50 SMA, which I could use to say, okay, if I get a sell signal, it's price trading below the 50 SMA, then to me, that would be a more valid signal. But to be honest, it's a secondary confirmation that I don't always follow. I'm really just looking at the price action. And so I could easily just delete this or hide this indicator. It would be all the same to me. So what's the setting right now on here? I don't know if I mentioned the 89 yesterday, but this is an 89. And I continue, like I said yesterday, to play around with different lengths. What I'm trying to find is a happy medium between, which is really hard to do with any indicator, because no indicator is perfect. They're all lagging, and every market's different. I mean, 22 Forex pairs, every one of them acts differently. Okay, but I'm trying to find one that, is allowing me to trade on a little bit shorter time frames, so I have more opportunities. I'm not missing what are good, legitimate moves. So having it long enough where it filters out a lot of the junk signals, but not having it so long that I'm missing opportunities or getting super late entries. And 89 is a Fibonacci number. Again, that probably means nothing, but it's a fib number. So I was experimenting with like 55, 89, 55 is a fib too. And I kind of like the 89. And this actually can be used on the shorter time frames. I actually like it, believe it or not, on a 2 hour time frame. 1 hour, I was, back testing. I've been back testing like crap all week. It's my first week back from vacation. And so I'm kind of resetting and just taking a fresh look at stuff. But the 2 hour chart is actually pretty good, but just standardize on the 4 hour. That's fine too. And you can see what it does. It smooths out the price action. I'm still looking at the cattle chart here. even though I changed the template. This is still cattle, so that doesn't do us any good. So let's click over to a Forex pair. Okay, so this is let's just take this one right off the top. Aussie Canadian, you can see clearly we're starting to trend down here. Um, and you can see we're just getting the signal on the 4-hour chart now. So this is what I'm saying, like this is potentially a late entry. So, but this is the trade-off between having smoother indicators and taking less trades and understanding that you may get a late entry. Now, at the same time, we had a buy entry. There was a buy entry back here on May 26th, a few weeks ago. And we had an entry like basically on this candle right here, which is really at the start of this uptrend. And you could have held it all the way up here, potentially all the way up to here if you had. And, so whereas right now we're starting to move down and we still have not actually gotten the sell signal yet. Okay. If I put the indicator on live, I turn on the live feed. Let's see what it looks like. Yeah, if we turn on the live feed, you can see that we actually kind of do have the sell signal on the live feed. You can see right here. You can see with the live feed on, the Aussie, which is the red line, is now crossed down through the CAD, which is kind of up, not terribly. So this is one of those times where, like I said, I always talk about using the live feed or not. The live feed, when I turn that on, basically just updates these lines in real time. Whereas if you turn the live feed off, it doesn't update until the candle closes. So in this case, it's a 4-hour chart. Till that 4-hour candle closes, those lines do not change. Okay, so they only update, in this case, every 4 hours. All right, you turn on the live feed, it's going to update in real time as price unfolds. And so the benefit of that is you could potentially get an earlier entry, but the downside is the candle might close and that signal could be gone. By the time the candle closes, price has gone back the other way or back into a range or reversed or whatever. And so you get caught on the wrong side because it was just a flash in the pan, basically. But so it's a trade-off, potentially getting into a trade sooner. Would you really get into this particular one any sooner? No, because you're really just getting that signal now on this current candle. And of course, it's a Friday afternoon. I wouldn't enter anything now anyways. But if this was anything other than a Friday, it still really wouldn't give me any better signal than if I waited until like 4 o'clock for this candle to close and then see what I get at that point. Okay. So it's kind of a trade-off. I think on a higher time frame, like a 4-hour or higher, it's probably doesn't make that much difference because you're on a high time frame already. You're already kind of running on a slow time frame. I think if you were trying to do this on like a 1-hour chart or lower, it probably becomes more of an issue. Okay. So let me turn the live feed off, but I just wanted to kind of show you the difference with that. And then we go back to how we were. Now, if we go to the 2-hour, we can clearly see the signal on the 2-hour. Okay. Now, nowhere in here. Now, here was that. Let's see this buy signal. There was a sell signal here. We started getting the buy signal on this. I mean, really, it was probably here. It was right around here. We got the buy signal, and then up to here. And then you can see was really nothing all through here. No entries. And then boom, we get this sell signal on this candle right here at the close of this candle right here. And you could have been in that. And again, that's why I think with the longer length look back, in this case, 89 period look back, this gives us better opportunity on the shorter time frames without getting in, too late but more importantly, filtering out too many false signals that you get with a shorter look back. I think on a high time frame, if you're up on the daily chart, I think 89 is probably a little too long. And you're going to go through long periods of no trades on some assets because it's going to take a lot to get that crossover on a daily chart. Okay, so I'm not going to go through every pair, but you can see we had a U.S. dollar news today, and we had, the Japanese yen basically strengthening, so it's kind of a risk-off day. So that caused, all these yen pairs to fall off, and the Aussie has weakened. You can see the Aussie New Zealand. Okay, you look at the indicator, right? The lines are together moving down, but they're not diverging. And what do we see during that time? we see sideways price action because they're both weakening currencies. So if you either saw these lines moving sideways together or up together, or in this case, down together, that is probably going to show you, this is not a market you want to try to enter. It's consolidating and forget about it. So, and that's exactly what we see. So we're not interested in that. The Aussie US dollar, the dollar strengthened today. The Aussie weakened. This is a great trade. Here's the 2-hour chart. This was during London. This was 5 a.m. And then we had non-farm payroll in the US today, and that was good for the dollar. The jobs report was good, and that just accelerated dollar strength and kept this thing moving the whole day. There's the CAD Swiss. Again, the Canadian dollar also had some strength today. The Swiss really is neutral. So it did go up, but we don't have a weakening Swiss. We have a neutral Swiss. So that kind of took a little bit of the wind out of the sails. Again, we like to see them going in opposite directions for the best signals. Okay, you can see if you had taken this trade, you would have gotten in basically at the close of this candle, and you'd be basically sitting at break even the rest of the day. So it really didn't go anywhere. So here's one that's, kind of rocks that boat a little bit. This is the CAD yen. You can see both trading up, okay? Yet we've got the pair heading down, okay? But you can see what's starting to happen now because the 2-hour candle just closed a few seconds ago. You probably saw that line just change while I was talking because this is a 2-hour chart. It just closed at 3 o'clock. And then, of course, there'll be one more candle here now that'll close at 5. And you can see it updated, and you can see we have a strengthening yen and a neutral CAD. Okay, and so that's causing this to go down. So even though they were kind of heading kind of up together, they literally just updated, and that's kind of confirming more of this down move. All right, so I'm not going to go through every pair. I do want to talk about a couple of these that were in consolidation. Let me go back to the 4-hour for a couple of these. This is Euro Aussie. You can see this box I have drawn around here. If you really want to, catch all this, you really have to draw the box like this. But it looks like maybe we're going to break out of this, but we'll see. I did not. I guess you can say there technically was a long signal here during the London session. This was 1 a.m., so I wouldn't have been on the charts then anyways. But we did have a kind of a little tiny long signal here. But then you can see prices, both currencies continue to kind of weaken and the volatility fell off. So we got back to the top of the range, but we have not definitively broken this. So even if I was on the charts at this time, if this happened like during New York, I would not have taken this trade because it's still inside the range, and I'm just not interested in trading ranges, especially with a method like this. Okay, so that's why I got this box here. We get a clear breakout, and then these lines start to diverge, and we can clear all these old highs. That'll be a different story. Okay, there's the EuroCAD. There was no trade there. Again, even though we're kind of trending down, at least on the 4-hour chart, I bet you we go to the 2-hour, we'll see the signal. Yeah, we just got the signal on the 2-hour chart just, in the last couple hours here. Okay, so that's what I'm saying. This 89 period works actually pretty well on the shorter time frame on the 2-hour. The 1-hour, I know it doesn't sound like a big difference, but when I back tested it on the 1-hour and the 2-hour, the 1-hour still was generating a lot of false signals. So just going to the 2-hour helped. This was a really nice signal right here on Euro Yen. Again, this happened before I was, no, I was not home. I had to take my dog to the vet today, if you want to know. She had some surgery done. I had to bring her in this morning, and I was at the vet's for a while waiting to drop her off. So I missed the first 2 hours. So I didn't take this because I missed it, but so be it. I'll wait for a pullback. Nothing really on Euro Kiwi. Technically, I mean, there was a long, but that was back here a couple of days ago. There's nothing today, just a continuation. There's a really nice short on Euro Dollar. Again, this is probably NFP related. Yeah, no, actually, this was before. This was the 7 a.m. candle. So that was actually before NFP. But when NFP came out, it just accelerated it and strengthened the dollar more. So here's another consolidating pair. This is pound Aussie. You can see this one looks like we've broken out. We've now had, we came up to the top of the range, pulled back, and now this second candle is continuing up. So if we close today, get a daily close up above this range, I'd probably be a little bit more inclined to feel this is bullish, but there's still no signal on this time frame. But So I'd probably have to wait for some kind of pullback. But pound Canadian, nothing on this time frame. We kind of trending up. The Canadian had some strength earlier, so it did push this pair down, but there's no signal just based on that. Pound US dollar. Um, we had this buy signal here. That was a couple of days ago. Oh no, excuse me, that was pound New Zealand. Pound US dollars right here. Okay, yeah, there's your strength in the dollar, and so on and so forth. We can just keep going through those. Okay, so that's kind of what I wanted to show you today, guys. This is a setting that I never thought I'd go to. It seems like it was just way too long. But in the back testing, what I find is that the entries are really not that much different than using like a 14 period or 20 period CSI. They're really not that much different. In kind of low volatility markets where like one currency is strengthening and the other one's neutral or vice versa, then the entries can be a little bit later because you don't have that volatility push to drive the indicator. But for the most part, in a volatile impulsive move, the difference between the entry on an 89, like on a 4-hour chart, between the 89 and the 20 or the 14 is maybe one candle. And I don't know about you, but I don't really care about one candle. I mean, unless it's a gigantic, engulfing candle. If it's a normal impulse candle, I don't care. I don't need to pick the top or the bottom. I just want to get into a move that I can take the bulk of that move out and then exit. And so this kind of strikes a little bit of that balance between having a method that's filtering out a lot of the junk, but yet not having you get in too late or miss too many trades. And having the option to go down to the 2-hour chart and still have reasonable signals is a great thing. So I'm going to continue to manage it with this. I found with the shorter time frame, the shorter look back period, to be honest, I think I still was really over trading because, it was just driving too many signals. This will force me to kind of like, take my hand off the mouse and force me to kind of look at making sure that those signals are valid. And yes, you still will have some losers, and yes, I still will miss some based on this. But overall, I think it's a better look. So, all right. So I'm not going to belabor this, guys. I think I'm going to just leave it there. It is Friday afternoon, and we're at 28 minutes almost on this video. So I'll wrap it up. I hope that was helpful. Let's keep an eye on those grain markets next week and futures. I think we could still unfold some really nice daily trades in the grain markets on at least a couple of those that we talked about. And then for Forex, I'll continue to kind of refine this a little bit. And someday I will kind of standardize on what I want to do. I know I've gone back and forth on this. If you've been watching these videos for the last few months, anywhere from the weekly chart, using it all the way down to the 2-hour chart now. And look, there's no wrong answer to any of those. If you want to trade on the weekly chart or the daily, because you only want to look at the charts once a day or once a week, that's beautiful. There's absolutely nothing wrong with that, especially if you don't have the desire or, more importantly, probably the time to do anything different. Perfectly doable. 10-hour, 12-hour, daily, weekly chart. You only have to look at the chart at most twice a day, and even less if you go higher. But if you've got the time and you've got a little bit of extra time where you can take a look at the charts, a few times a day instead of just once, then 2-hour, 4-hour chart could be a good option with this 89 look back period. And you don't need to have the live setting on either. So I'm going to leave it there, guys. Hope it was helpful. Any questions, comments, leave them down below. Again, on your way out, smash the like button, subscribe to the channel. I hope everybody has a great weekend. If I have time, maybe Sunday night, I'll do a little run through of the Forex pairs again and just look at, what might be setting up for next week. Although we kind of just did that, although I didn't go through every pair. So maybe I'll create a new watch list going into the new week, and I'll drop an update perhaps on that if it's worth it. And we'll see how it goes. All right, guys, have a great weekend. Talk to everybody soon. And again, be safe and have a great weekend.